This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Juan Villalobos, FinTech Program Director at Startup Wiseguys. Startup Wiseguys is a mentorship-driven accelerator program for early-stage B2B SaaS, FinTech, cyber, and sustainability startups providing seed capital, office space, and most importantly, world-class mentors. The intensive 5-month accelerator program is focused on validating, developing, and selling products to business customers. Over 250 international and local mentors with B2B startup experience help startups move through those stages much faster than they would on their own. Founders are also prepared to sell their vision to investors, and the program culminates in a demo day where startups get to present to venture capitalists and angel investors. Juan, thank you for joining us.
Thank you very much for having me here, Hall.
So what was your background before investing in early stage companies? What did you do before this?
Well, I'm old enough to have been doing a lot of different things. I used to be a consultant working for banks, and then I work in a bank, and then in different countries and insurance companies. And then I decided to move forward on my own and launch a couple of startups myself and started investing.
Great. So what excites you right now?
I love challenging the status quo. So I think that's my motto somehow. So everything which actually challenges how things have been done in the past is something that excites me a lot. Helping doing that myself or helping teams doing that is what excites me.
Oh, great. So you meet a lot of startups and a lot of investors. What's your advice for people investing in startups? What do you tell them to do before they write that first check?
Well, it actually depends a lot on what moment is in the investment, right? I mean, startups is a big word, so you could have very, very seed capital in which you actually need to look at the team and see how the team evolves and what the team structure is and how they are pushed and why. Actually, what I always ask is, why do you want to change the world with? I mean, what is exactly the thing that you want to change, right? And it's the team. Then, depending on if it's more later stage, I would suggest to look at traction and clearly the market, right? And how the market is evolving in the last years and possible trends in the market. But I guess the team is 80% a startup.
And then on the other side of that table, what's your advice for people running startups? What do you tell them to do before they go out to raise funding?
Well, they have to prepare themselves. They really need to understand that investors' money is precious. So they really need to understand and be able to explain what is every single euro. I'm based in Madrid, so I talk euros. What is the use they're going to do for every single euro and the reason why? The more numbers they have, the better. The more proof of the different things they have been doing, the better. And as I always say, they have to really believe in what they're saying. If they don't believe it, an investor will see it and will never invest on them.
Well, great. So let's talk about the state of investing. You have an accelerator there and you're investing also. How do you see the industry evolving? Where do you see it going?
Well, particularly in the fintech arena, which is where I'm more focused. I must reckon that our vision on fintech at Startup Wiseguys is very broad. So we cover fintech, insurtech, regtech, cybersecurity all together, or spaces where are regulated or there is a certain amount of money moving hands. The space is very hot. There's a lot of investors looking at it. There has been a certain number of exits which have put valuations pretty high. There's a lot of people thinking that they can do banking better than banks. There's a lot of people that don't realize that actually banking, insurance is regulated for a reason. So there's a logic behind that, which is normally a protection of the consumer. And there's a lot of players that actually think they can do better than the banks, and they are not just don't know the market. So that's on one hand. On the other hand, there's a lot of experienced people coming from banking industries who knows exactly the particular point in the value chain they want to push, and that actually you can see that they deliver a lot of value. But I would say if I talk about fintech in general, what happens is that everybody looks at that, valuations are very high, and it's complicated to compete on that.
And so what do you think the biggest change we'll see in the next 12 months in the fintech, regtech sector?
Well, not talking in these times about the COVID pandemics will be nonsense. I mean, what has happened now is that whoever was reticent to use online channels to talk to the banks or to execute transactions now has learned to do it. So I see more and more pushing of the end consumer towards internet, apps, mobile, of course, in general. That's there to be there and to stay there, which means that there will be more and more an evolution towards the customer service provided in the app or in the phone, I would say. And that experience of the customer is what is going to make the difference. This is not only a question of interest rates, it's a question of easiness, it's a question of understanding the way the end consumer thinks. So I think that there's going to be a lot of movement there. There's a lot of banks who don't do it well. So there will be a lot of evolution there, I would argue. There's a whole concept of self-banking, self-insurance, in which you just do what you want, when you want, and how you want as a consumer. And I think that's probably the biggest trend that we're going to see.
Okay, great. And so let's talk about your investment thesis. What exactly is your criteria for startups that you pursue and work with?
Okay. Again, as I was mentioning before, it depends a lot on the moment of the investment. We, in Startup Wiseguys at Accelerator, we do invest in early stage companies. That means that the team is there, the idea is there, there's close to the MVP. So there's a certain minimum viable product there. Not yet full ready, but there. So we invest a lot in the team, a lot in the founders, which is what we call the team at the end. So that's very relevant. When we invest on the knowledge of the team, so they have to know what they're talking about. It cannot be just somebody from outside the market just saying, I'm going to do it better. I mean, this is a regulated business and there's a certain complexity. We like a lot the startups where they actually don't want to change all the banking. They're going to become experts on a specific point in which they do international payments better than anybody, or they do allocation of assets better than anybody, a specific area in where their chances of success are better because they are mainly B2B and they are mainly collaborating with banks. We believe that even if fintech founders say, I want to challenge the banks and I'm going to close all the banks in the world, actually what they want to do is become a bank in a certain moment in the future. So we kind of tell them continuously, look at the bank because they are going to be your partners. They are not your enemies. So that's the kind of approach we look for when investing.
Great. Can you mention one or two startups that fit that thesis?
Well, that's always complicated talking about names. There are startups which are very interesting in the digital identity arena, in the world of know your customer, anti-money laundering, which are areas where traditionally the physical presence, the face-to-face meeting was very important. And now is everything done mobile or in distance. So there are several of them that I don't want to talk specifically about none of them. You just have to check our portfolio. We have invested in the last couple of years in a couple of those, actually, because we have several know your customer and anti-money laundering. Asset management, robo-advisors are very interesting too. And we like to a lot those who are, and I think there's going to be a big success in those who are trying to help underbanked arenas to be able to do different things. We have just invested in a company that is actually helping African small entrepreneurs to declare their VAT, which doesn't seem fintech, but actually what happens is that thanks to that, they're able to grow their business and become better regulated, and facilitates the movement of money. So these kind of companies are the ones that I think that are going to be successful.
Great. So you work with startups and investors. In today's world, what do you think is the main challenge your startups face? What's the one thing that makes more challenge than others for startups?
The challenge for the startup is always the same one, which is traction on sales. So getting the appropriate product market fit is what is the key question. I mean, there's a lot of very good ideas that don't end into a real product market fit, right? challenge for startups. Everybody will say that is the money. It's true. I mean, they don't have money, but there's many investors looking at them. So that's something that will be solvable. The real thing is really your product something that the market wants? And it's not just something that you think is going to be better than the rest. So listening to the consumer, I mean, the consumer is the key thing here. And that's the challenge. It's always been the challenge, and it's probably always going to be the challenge.
And then for the investor that are looking at those startups, what's the biggest challenge they face?
Well, I think there's one very specific in the fintech arena, which is first, the valuations. Fintech is a case in which traditionally startups think that they're worth a lot when they have nothing, just because there has been a lot of investment, right? I mean, there are particular countries, particularly in Europe, I think the US is the case too, where valuations are just 2, 3, 4 times bigger than any other software as a service company or any other tech company, right? So for an investor, that's pretty much a challenge already, because you really need to understand where to put the money. And if you want lower valuations, you actually have to go pretty early stage. So that's already complicated. On the other hand is the relationship with the team, understanding that you cannot kill the team and you have to let them thrive and let them develop themselves and let them grow the way they are. I think that in my arena, those are the main key things, is the team and the valuation, which is tremendously high.
Great. Well, we talked about fintech, and there are many subsectors and applications within fintech. If you had to pick 1 or 2 subsectors that you think are a good opportunity for investors to pursue, what would you put at the top of the list?
I think international money movement is one. There are not enough solutions in the banks over there. I mean, you have SWIFT systems, you have SIPA, you have other models, but it's not as developed as it should be. So that's one. Digital identity, your customer is already overcrowded, but still there's not a clear solution for that. And fraud management in general. Those are 2 which I think are very interesting. And then banking has a lot of processes, and they're very complicated. So any fintech who actually focuses only in one part of the value chain, as I was saying before, and excel in that, where they can sell that to a bank, not sell the company, sell the service to a bank or another financial service provider, those are the ones that I think are going to grow. I mean, the banks need to increase their profitability. They have an issue on the margins. Interest rates, at least in Europe, are negative. They need to reduce costs to become more efficient. That's the kind of things that are going to be very successful, because banks have money to pay. So that could guarantee a higher rate of growth, I would say.
Great. Well, in the last few minutes that we have here, what else should we cover that we haven't?
My advice here, I think for founders, startupping is, we have faced so many cases in which the startupper just believes in something and they decide to go there and think that is cool because there's a lot of success. Startups are tough, right? And they're tough, and they're a family-driven decision. I mean, you cannot just be a startup and leave your husband or your wife at home. I mean, this is a 324/7, I would say 37 work, and it's going to have a lot of ups and downs. It's like a roller coaster. You will probably fail. But if you have a startup entrepreneurship approach, you will get up and launch a new one. So realize that startups is not easy, and that it is like a real vital question. Not everybody should be launching a startup, which is always my concern. Yeah.
Well, that's good advice. So how best for listeners to get back in touch with you?
Well, I am the worst in phone, so it's probably an email. I normally use the one Startup Wiseguys, so Juan at Startup Wiseguys, JUAN at Startup Wiseguys is a simple way to get in touch with me. We always answer. Probably not immediately, but we do always answer.
Great. We'll put that in the show notes. I want to thank you for joining today, and hope to have you back for a follow-up soon.
As many times as you think. Thank you very much, Hall.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Hall T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinions of Investor Connect. This podcast is for informational purposes only and should not be relied upon for the basis of investment decisions.